Alrighty, today we'll be explaining what Wallstreetbets is to boomers. I'll be translating as I go along so that they can understand. Wallstreetbets is an online forum. Online is a place where you go with that paperweight your children got you for Christmas 3 years ago, and you open it up and the screen comes on and you can actually post things online for other people to read. So any more explanation, just ask your kids what to do with that. They'll be able to help you through that there, buddy. Okay, so anyway, Wallstreetbets has gotten in a war with this company, Citron Research. They refer to this as Citron. So if you look around or Google online Citron, I'm sure this will pop up for you too. I almost said Citron again. What Citron does is go ahead and research the market and then report on it in such a way that they allegedly change the stock price of what's going to happen. Because their other firm, Citron Capital, apparently also places short bets on the market. On the market, if you place a short, the stock has to go down for you to make money. So it's been alleged by Wallstreetbets that this company goes ahead and releases research reports that give out negative information about a company, so the stock goes down, and thus their shorts go ahead and make money at a certain point in the cycle that the stock market goes through. So that's the explanation of that. So anyway, they really hate these people, and they've really ganged up. They've given investment advice to a forum of people. I can't say a group. They are not a group. They are individuals who all want to make money. But in addition to making money, they also want to cost these people their money. So what that does is redistribute wealth from the older generation to the new generation, because they realize they can do things and they can buy things that will make them money now that people in the older generation just can't adapt to. You see, what they do, they trade on these things called smartphones. Don't worry, it can't get to you. You have one of these things, so it's all good. And they put up these little symbols here called emojis. Some of them are pretty funny. Let's see if we can. There we go. That's a rocket, moon, diamond hand emoji. They go ahead and do that a lot. Don't worry about the meaning. You can ask your kids about it. They actually have merch you can buy. Merch is merchandise for what they do. I'll leave a link to all of this stuff in the comments below, so don't worry about it. But they're making money off of merchandise as well as stocks and taking money from you, the older generation. To go a little more into what they actually do, there's an article here by Market Insider about short seller Citron, that the Wallstreetbets people are suckers at this poker game, and that his Twitter was hacked so he couldn't access it anymore. That's interesting because Citron here is supposedly a big short seller for Gamestop and likely has lost, $1 million, more than that in what happened in the market today. We're not going to go into the market today. We're just kind of explaining what this is to you. To show you what happens, this guy here, Mr. Gabe Plotkin, founded Melvin Capital, a big hedge fund and short seller of stocks. He may be coming out as bankrupt tomorrow. We're not quite sure at this point. But after what happened in the stock market today, it's very likely he could have lost a large amount of money. So these Wall Street guys, the Wallstreetbets guys, they're millennials. GameStop happens to be a millennial company. Millennials don't like boomers. The boomers that invest in Citron and Melvin Capital don't like GameStop. So it's created kind of an argument here, and the Wallstreetbets people are going to go ahead and win this war. At least they won the battle today, and cost the boomers here a bunch of money in their retirement funds while they make money. Now, nothing on this channel can be considered investment advice. I would not personally do anything any of these idiots suggest. But you know what? They show a couple of things that look like they're making some money here. This gentleman, Deep Effing Value, went ahead and increased his profits by 13,000%. As a boomer, you know that 13% you made last year and your wealth went up a little bit? Well, he went ahead and increased his by 13,000% by listening to Wallstreetbets. Again, this won't happen to you. You'll actually lose all of your money if you try to do this, whether you're a boomer or not. So don't listen to me about anything investing-wise. And just go ahead and hang on to your 13% gain last year there, sir. Or ma'am. Okay, how this all got started. Wallstreetbets kind of pissed off as millennials. They don't have any money. They want to redistribute wealth. So they do have a problem. The short seller guys, the Melvin Capital and the Citron people, went ahead and tried to put Gamestop, their favorite company, because they sell video games over there, in case you don't know, and tried to put GameStop out of business by shorting all the stocks. They, in fact, had more short positions open than there was stock available. So these guys went ahead and purchased a bunch, individually, of course, and it caused these guys to lose a whole bunch of money. The allegation that really pissed them off was that these guys collude to take stocks down, close businesses, and make money off of destroying other people's lives, which they did not appreciate. So to go a little bit into the details of that, I'm going to show a video of a boomer, Jim Cramer, possibly admitting to some things, but just read the title in the bottom left here, but explaining what these short sellers do. Here we go.
You know, a lot of times when I was short at my hedge fund and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money. Similarly, if I were long and I would want to make things a little bit rosy, I would go in and take a bunch of stocks and make sure that they're higher, and maybe commit $5 million in capital to do it, and I could affect it. What you're seeing now is it probably is bigger market now. Maybe you need $10 million in capital to knock the stuff down, but it's a fun game and it's a lucrative game, and you can move it up and then fade it. That's often creates a very negative feel. So let's say you take a longer term view intraday, and you say, listen, I'm going to boost the futures, and then when the real sellers come in, real market comes in, they're going to knock it down. That's going to create a negative view. That's a strategy very worth doing when you're valued on a day-to-day basis. And I would encourage anyone who's in the hedge fund game to do it because it's legal,
right,
and it is a very quick way to make money and very satisfying.
Okay.
By the way.
So what Jim Cramer there just said was that when he was in charge of a hedge fund, they would make moves in the market to satisfy the most profit on their position, which he said was legal. Wallstreetbets here alleges that it is in fact not legal for short sellers to collude and manipulate the market so that they can go ahead and make money on the bets they've made previously. They did a great job of that today, Friday, January 22nd. We'll see if that continues. This is all just started for them. Stay tuned for more info on Wallstreetbets. All right, take her easy, everybody. Good luck out there, and don't invest in the stock market.